Welcome to the Dividend Talk podcast, episode 111. How we will generate €1,000 with monthly dividend income. Hey guys, welcome back to another episode of Dividend Talk. Today, myself and European DJI will break down how we would each generate €1,000 per month from our dividend stock portfolios. All that and more. See you on the inside. Good afternoon, European DJI. How are you today, buddy?
Really, really good. Thank you for asking. I mean, I had a good week. And of course, yesterday's price action was really interesting. Although I must confess, and people might have noticed that I've been a bit quiet lately because still I'm really deep into work, but also I'm really making sure that I'm enjoying the summer this year. So yesterday I went to a concert of Ed Sheeran, a great entertainer. And yeah, you could say somehow paid by dividends, of course, right? Because I've got enough income from dividends that I can, spend on these kinds of things. But, I rather reinvest them. But we should also enjoy life now, right? Although those tickets are really expensive, I must say.
I always wonder how, music artists like Ed Sheeran tour Europe, particularly in non-native English-speaking countries, like Poland and all this, because Ed Sheeran doesn't sing in Polish; he sings in English. So
yeah, this is so funny because yesterday he said several times like, "Come on, guys, sing along," and then he put the mic to the audience, and people were not able to sing because we didn't know the lyrics, so it was quiet. And then you saw him smiling, laughing, and then he did this song that he gave to Justin Bieber. What's his name? And
yeah.
and then everyone was able to sing along that song because Justin Bieber, he just sings songs that are so easy.
Yeah.
But Ed Sheeran is a little bit more complex with the lyrics and the text, so it was quite entertaining. But then his last hit, I forgot what's the name, but most of the people could sing along with that one. So
yeah, good. I like Ed. I went to see him before the pandemic sometime. He was pretty good. It's obviously different over here because we understand and can sing all the lyrics, so it's the atmosphere is probably a little bit more upbeat. But yeah, he's a good guy. You mentioned price action. It was a bit of a crazy day yesterday, wasn't it? It took quite a hit.
Yeah, exactly. So I was not really paying attention to the market because I was really busy at work. But yeah, simply said, I think Powell, said that they will continue to fight inflation. So we should expect, I guess, more rate hikes. And the market was hoping a little bit differently because I think generally the sentiment is a bit changing, like the feeling that we have the worst behind us. But we know that the Fed is usually like 1 year late. So yeah, I mean, the market didn't like it, went down. But on the other hand, it also had to cool off a little bit, I think, because we saw the last few weeks really rapid price action again. But again, for me, it's so awkward, right? Biden is, how is it, with the student debt, everyone 10,000 write it off. I mean, we had the stimulus checks that got us in this inflation. And I really have the feeling that, and it's across the world, right, that politicians can't or don't want to make unpopular decisions that would actually be best for us in the long run, and they expect central bank to do the cleaning for politicians. And I guess it is how elections work every 4 years, and if you make an unpopular decision, then you will not get re-elected. We have a lot of populism going on, so this fear as well, and then you get this awkward stuff, right? But I think we should, we have given kind of Fed and then ECB an inflation target, right? And then they're effectively covering all the mistakes and all the stupid decisions of politicians, and that's what's going on here. I mean, it's crazy when you think about it. $10,000 student relief, and then wondering where the inflation comes from for all these kinds of things.
I mean, look at some of these politicians. They have no history in finance, no real formal education, and they're coming in and they're making decisions for everybody else. Where you have a central bank that is, what would you say, people who are educated and
Yeah,
expected to make the better decisions. So it'd be like me going in and working, I don't know, in some random field that I don't know, and making decisions. I wouldn't have a clue, and I don't understand in politics, particularly in Ireland. Like, we have health ministers that are not no
yeah,
health background. We have finance ministers that have no finance background. I don't understand how they can make good decisions. I know they have people around them to help them, but at the end of
yeah,
the day, they make decisions. As you said, it's a popularity contest. I mean, my dick is bigger than yours. I want to give you as much as I can,
yeah.
and you're going to vote me back in. So, I mean,
Yeah,
I'm not
because
I'm not surprised.
what the real good decision would be is just to bring educational costs down in America.
Yeah,
Go to this university, kind of put a non-profit target on them, whatever it is, or make public universities or something like that. Yeah, if you want to do this more, and but this is they're out of hand, and then they try to do it with some gifts, which I think, I mean, if you're already so large in debt for most of the people there, what will happen to that money? Maybe they will buy it on a second-hand car, so more loans again,
yeah.
whatever they do. So
I mean, did you tell me, or did I read it somewhere, that Harvard University, they had, they're worth about, what, 50-60 billion dollars, and they had a lot of that in cash.
universities have one of the best balance sheets in the world.
Why wouldn't they? And they charge an absolute fortune to study. Like, I don't get it. You can go to Scotland and get free education, and I
I
mean,
I do this. Yeah, I recommend this always to my American friends. Like when I hear that they are saving up 100K for a really good university for their children, I said like, damn, for 40K you can send them to Paris or something like that. They'll take a job somewhere still at McDonald's or whatever, and they have the time of their life in Paris.
yeah,
Yeah,
it's crazy.
with a good education on top of it.
Yeah,
So.
I think you mentioned something, actually, didn't you, on Twitter? I seen you did an overlay of the price action between the last crash and this one. Was that
I
you?
did do it myself, but I saw it, yeah, and around 2008, and now that there were a lot of similarities. But then there was another one on social media that showed like how the bulls look at it, and you
Yeah, I
saw the
seen that one. Yeah,
overlay,
yeah,
and how the bears look at it. So
yeah,
there are like four historical price charts that you could overlay. Two of them we would expect now really steep growth, and the other two we would expect now really deep crash. So it was really nice to see, because it just tells us again, like, we have no clue what the price action will be on Monday. We
yeah.
really have no clue.
I mean, it's quite easy. I'm going to post on Twitter saying that we're going to be bearish. I'm going to post on Facebook saying we're going to be bullish, and then I'll be right on one platform.
Yeah, and
It's
I'm
that
still
it's that
waiting.
easy.
I'm still waiting because 1 or 2 weeks ago, Graham Stephan and all of these were saying that in 30 days the market bubbles of all Chinese market bubbles will collapse. So we're expecting an apocalypse in, well, I think in 2 weeks from now. I'm still waiting. Popcorn is
Yeah.
ready, but I'm afraid that I will go bed to bed frustrated that didn't happen, because all the excitement that suddenly popped up on social media.
It's a minefield, but you're dead right. Nobody actually knows, and the people who do know are not going to be posting it on Twitter. That's for sure.
But how can you even know? Who can know? I mean, Michael Burry sold everything except one stock, but what does he know, right?
Mm.
He has been doing this several times. So
I can tell you, Powell will know that before his talk. He knows,
yeah,
okay, I'm going to sink the stock market here by 10%. He knows what he's doing.
exactly. And then Pelosi. Yeah.
Yeah, exactly. These guys know, but they're not on Twitter saying, "Hey guys, in 3 weeks' time, the stock market's going to be down."
Yeah, but we maybe there's also, we got a question, right? How can we stay patient here? So maybe we can address that question already, because for me there's also really a lot about this. So Lawrence Hambrook, he asked, like, how do you handle patience, or rather impatience? You guys have said before that it is get rich slowly. There must be times where you get frustrated. He does, right? So how do you deal with this? And for me, how do I stay patient? It's actually that I look a little bit at the stock market reactions, like if I'm watching comedy capers.
Yeah.
Right, if you read the analysts on a daily basis, you start to just laughing, because I mean, tomorrow they're all saying, it goes up, and the next day it's like, oh, it's the worst ever. There's always a statistics that says that we have the worst period ever, and there's always also a statistic that says we have the best
Yeah.
ever. So if you just start to see those patterns, I mean, that's what gives me patience, because I just see the shitload of crap is in there, and that the stocks in my portfolio are just slowly compounding, and it's so much nicer to watch your portfolio every week and look at your dividend income and do the
Yeah.
counting of the dividend income, and not, you don't even need to watch the share price anymore once you become really really dividend income focused, right? Because most people are also still a little bit looking at total return and all these kinds of things, and there are
Yeah.
also cases to make total return. But what helps me to be patient is just to really not care about the price. I look at the price, like I just mentioned, but also more from I said, from an entertainment point of view. And if I look really seriously at the price, it's really to see if the company is targeting or nearing my target price.
Yeah.
So for that reason.
Yeah, it's a little bit simpler for me because I'm so busy. Mark, you'll notice my social media presence is probably at an all-time low. But what that does in turn means that I'm away from a lot of the noise. I I didn't I didn't capture that the price action yesterday was completely bonkers until the market was even closed last night. So even if I wanted to do a knee-jerk reaction, it was too late. The market's closed. It's now the weekend. So I tend to stay away from the noise. Work keeps me busy. Um, Honestly, if I didn't have a podcast and a blog, I probably would never check my portfolio, only when I want to buy something. That would be probably the only time.
Yeah, and this makes also strong case to have a coffee can portfolio or something like that, where you just put in a broker that you. And by the way, talking about patience, I'm also contributing every month via work, right? I've got like an employer's match, and it
Yeah,
goes somewhere into something like an ETF or something like that. I open it maybe once a year, just to see like how did it do. So if you, so there's also maybe for Lawrence, if you automate everything, if you for instance have a trading 212 pie with your favorite stocks, let's say 20 stocks in there, and you deploy every month, I don't know, 500 euro in there, you just don't need to log into trading 212. It goes all automatically, and you don't need to worry. And I can tell you, you probably become really patient automatically as
yeah.
well.
Yeah, but I get you. I mean, it's easy to get impatient and FOMO. I think we spoke about that
Yeah.
before. I mean, it's quite easy, especially in this digital age when you see some 19-year-old kid making 2 million a year on YouTube and investing it in dividend stocks and making more than I do in 10 years. But I mean, try not to compare yourself. Make a plan, stick to your own journey, and you'll
Yeah.
be fine. Just turn off Twitter and Facebook whenever the market crashes, and
Yeah.
you'll be absolutely fine. Hey, and what about 3M? Actually, they're back in the news. I mean,
Yes, yes. Last week we were applauding them to pull the G&G Johnson Johnson trick, right?
yeah,
On filing a Chapter 11 on a spin-off where they would put all the litigation in. Well, bad news. The judge didn't agree to it, and the judge said effectively that they should still face the more than 230,000 lawsuits for selling defective earplugs, because the bankruptcy of a subsidiary does not stop lawsuits against the non-bankrupt parent company. That was the
yeah,
verdict. This is a big blow to 3M, really a big blow.
yeah.
The price went down almost 9%, I think, yesterday. So I really need to start reconsidering my position in 3M. I must be honest, because it's becoming really ugly right now. I'm not so much in the minus actually. They also gave just a 1 cent dividend hike last year, right?
Yeah.
But I read somewhere that this could be up to 100 billion in litigation, and I've already had a buyer in my portfolio of Monsanto. So, and they also still have this other, what is it, kind of a pollution near Belgium,
Yeah.
this lawsuit. So, you know, hmm,
Yeah.
I really need to reconsider my position, because for me there are better opportunity costs out there.
100%. I mean, I sold them, which and I was selling puts on them. I've now closed them in a small bit of profit. Not I didn't realize the full profit, but I sold them. I figure these guys are going to drop another couple of percent. But I mean, for me, that's a huge deal, and I'm staying away until this is sorted.
Yeah,
As you quite rightly said, Bayer Monsanto, it's a lesson. I mean, we
yeah,
speak about it so much, and I think it'd be foolish for two guys that are so hard on Bayer to not learn our lesson with 3M.
yeah,
So I would really still love to own the company. I mean, they have great products, but until they sort this shit out, I'm staying
yeah,
far
yeah,
away as
yeah.
possible.
It is a decent position in my portfolio, and emotionally, I usually struggle a little bit like that because I'm committed to my portfolio, right? So
Yeah,
3M is currently my, what is it? My, how much is it? It is my 11th biggest position. So it's not a small puppy there,
yeah,
and I'm slightly in the minus. I think all over time I'm, yeah, I can see unrealized gains 7%. So it's not too bad. So maybe I should just cut my losses and redeploy it elsewhere. It's for me really not yeah,
it's tough for a company like this. You're looking at a dividend king. There's a lot of nostalgia there. I mean, reliable dividends over the years, and I think it's probably easy to find arguments to hang on to it and hope for the best. I mean, lots of people did that with AT&T, for example, and
yeah,
you can count me in there. But I mean, if these guys cost them 100 billion, the dividend has to be cut. I mean,
yeah,
there's no doubt about that. And then if they cut their dividend, being an aristocrat or being even a dividend king,
yeah,
the price could plummet even further. So for me, the risks at the moment outweigh the positives, and
yeah.
it's not worth my
Yeah,
my
I need to really think about this. The good news is that it's only 2.7% of my portfolio. Yeah. So that's where diversification kicks in, but
yeah
it's still money that I could deploy elsewhere without that risk. And there are a few such risks that I really hate. That is litigation. That's why I also got out of Philips,
yeah
specifically if people can't deal with it, and fraud. Those two, because you get to deal with the government in both cases, and it's really unpredictable, and litigations that are really materially impacting the bottom line,
yeah
like can wipe out a one or a multi-year profit. Those are the ones I don't like, because every company has some sort of litigation almost in my portfolio, right? Even Microsoft sometimes gets a court case about, I don't know, a license or
yeah
whatever. But these are really material, really
yeah
material.
yeah. So hey, let's bring back a little bit of European flavor. We were talking about US companies all the
Yeah.
time, and Novartis are now in the news. They are intending to spin off Sandoz, I think.
Yeah, I believe Sandoz is their generics business, right? And
Yeah,
also focused on biosimilars. Novartis, good old Novartis. I owned some of it, right? But I sold it, I think, earlier this year because it went nowhere. In the beginning, I thought the CEO gets it, data science, strong focus on it. But the company is just floating and it's just going nowhere. And I think what they are trying to do is to restructure, to become leaner as a company, really focused on the pipeline. And I guess they think that Sandoz will do better off on their own and they want to spin it off, but still benefit from it. What is interesting around the spin off is that Sandoz, that they want to spin it off with a vision to deliver attractive dividends. And we will get an update on the Sandoz dividend policy anytime soon. And if they pay dividends, it would be on incremental. So I believe what they are trying to say is like the Novartis standard dividend will stay in place, and everything on top of that, or no, everything that Sandoz does is just on top of that for shareholder. What's not clear to me is like if I would own Novartis stock, what I would get out of it. Would I get like shares in Sandoz, and would this be then like a certain, I said, a certain ratio or something like that? That's all not clear to me. So if ever anyone knows it, please let us know. I'm very interested in this deal. But honestly, I would probably, as a shareholder, be more interested in the Sandoz asset than in the Novartis assets, because with Novartis, I've been analyzing or following them now for 3-4 years, and this company is just going nowhere really. And I know they have some small successes in their pipeline, but overall, yeah. And we had the same with Sanofi the other day, right? With the where they didn't get the pipeline approval. So yeah, I see it as a struggling company, Novartis, to find growth, and it's not of the quality as a, for instance, for me, as a Roche or AbbVie or Johnson Johnson.
Yeah. I mean, what's actually nice for European companies that they seem focused on the dividend. I mean, they've mentioned it 3 or 4 times just
Yeah.
in that press release. As you quite rightly mentioned, it doesn't look like there is any cut to the dividend. They're saying any Sandoz dividend will be incremental to the Novartis
Yeah.
dividend. So there's no suggestion it's going to cut or decrease, and they've mentioned that that's their priority, to grow free cash flow, to grow the dividend, which is refreshing for a European
Exactly.
company.
Yeah.
But maybe they just need to focus on getting the company back.
But we know what some listeners will say. Guys, why you even talk about Swiss companies? 35% dividend
Yeah,
tax.
it's hard. I mean, I'm the same. I don't invest in them because of that reason. And it's a pain to probably get that money back, and I wouldn't invest enough money to make it worthwhile. But I mean, there's some really good Swiss companies that I would love to own, like, you know. So why
Yeah,
can't they just
yield after tax. Yield after
yield
tax.
after tax? Yes. I actually saw someone on Twitter post these about Swedish companies. Actually, they named 3 Swedish companies and had the same comment: focus on yield after tax. And I think that's
Yeah.
good advice.
Yeah. And by the way, 35% is probably still lower than most people's income tax.
Yeah, and probably lower than eToro.
eToro, yeah. I hope, yeah. Next topic. Hey, let's talk about the main topic. So the topic here is a little bit of an hypothetical game here, right? So
Yeah.
what we would like to discuss, and more like as a mind game, is like, how would we generate €1,000 of monthly dividend income? So the rules are €1,000 per month, each calendar the same, month the same,
Yeah.
right? So the question that I have, which stocks would you choose? How much would it cost you? And how comfortable would you feel with it?
It's yeah. Let's go with this. So I'm basing this on companies in my portfolio. Okay, I just looked in my portfolio, and the very first company I'm going to go with, January. So they pay every 3 months. So it will be Altria is the very first company. I mean, they have I'm starting with a really juicy yield here. I give myself a chance, but they have a 7.85% yield. I would need roughly 833 to 834 shares to generate €1,000 a month. Now we have to say that I'm assuming parity between US and Euro. Okay, just to make it a little bit easier. The total cost for me would be only $38.2 thousand or euro, which
And that
is
would give you €1,000 every quarter.
every quarter. Yeah, from Altria, which is not too bad. I look at my portfolio and think, what am I doing?
Yeah.
Why don't I
Yeah,
just do this?
you could be financially independent.
Yeah, I mean, they had a nice dividend hike. Recently, it's in the news that I think they increased it by, well, I say nice, it's okay, but it was 4%. And we know it's a declining business. Tobacco, it's a hard industry. So would I realistically want to put all my eggs in this basket? Probably not. I mean, but I still think they're a quality company. You can see that their revenue per share is steady, a little bit inclined, but it's quite steady. Free cash flow, I mean, since it's nearly doubled since 2017, so they're doing something right. Dividends, that's always a nice dividend chart to look at. Another dividend aristocrat. So, and do you know what? They have a decent return on capital as well. You're looking at 18%, 2018, 17, 12, 11%. So you're getting decent returns on these guys. I have them in my portfolio. I have about 100 shares, and I always sell puts and calls because they're kind of range bound. They go between 40 and 50 quite often. So it's for me, yeah, that would be my first pick.
Cool, cool. And which ones would they pay?
They would pay in January, April, is it June? January, April, July, October.
Cool. So, good pick, good pick. But would you sleep well with that one? Maybe that's a question we'll do in the end of the
Yes,
ones that you
yes.
chose.
Yeah.
So my January stock would actually be Castellum. Castellum is trading currently at a 5% yield. And by the way, we do it here before tax, right? So
Yes.
after
Yeah.
tax, it might be look a little bit more unfavorable for me. They pay a dividend per share on a quarterly basis of 1.9 Swedish crowns. I would need 5,600 shares at a total cost of 79,000 euro, almost 80,000 euro. And yeah, and based on that, I will get 1,000 euro a month. Castellum, for people that don't know it, it's the Swedish real estate company. So it's not officially in real estate investment trust. They pay tax and everything. And yeah, that would be really my pick. There's a bit of risk in there, of course, like with the modern ways of working and what does it mean as remote working. But so far, they've been dealing with it really well. There's also some debt payments coming up, but they have been taking the right actions. But I don't see this company, get really into trouble or anything like that. So from that point of view, yeah, I would count on 1/3 of my dividends on Castellum.
Yeah, nice. Hey, we started both. I mean, it's quite funny. We always say don't chase yield, and we started with two really high yielding companies. I think they were 5%.
Yeah,
Yeah,
probably.
I mean, it's a great company, and I still have yet to pull the trigger, but I think I'm going to get pretty close to these guys because, as you said, they are one of the better companies. I always get scared of the exchange rate and all that kind of carry on, but I mean, I am European, so I should be used to that.
Fact of life. Maybe it's even more favorable now.
Yeah, it could be. It could be.
Yeah.
I'll watch your video, and that'll give me some inspiration, and I'll buy them. So I'll move on to February. So we're looking here at February, May, August, November. And my second pick would be ABV, ticker symbol ABBV. Honestly, at this price, maybe not so much. I would have liked them maybe closer to 100, but at current prices, I would need to buy roughly 532 shares, yielding at 4.14%. So the total cost would be nearly double of what it cost me for all three. So it cost me around 72,000 to do that. AbbVie comes with some risks. We know their reliance on Humira. They are doing some good things. They have a nice pipeline. We have Rinvoq, which is starting to do quite well. Sky Ritzy. Actually, I was watching a Liverpool game pre-season, and every second ad seemed to be like an ABV kind of thing. It was Sky Ritzy and Rinvoq. And actually, have you ever listened to American ads on when they talk about pharmaceutical drugs
No.
and
Well,
it's
yeah, in America, but
it's so funny. So they have they have the ad which is good, and then right at the end for about 30 seconds, it lists all the problems
yeah,
really
exactly,
fast with the drugs.
Yeah.
This drug could lead to this. You're just going, what the what's going on here? It's quite funny, but yeah, ABV be my second pick. I mean, both of these, I would say, with risks. And again, it's a higher yielding company, but one I would be happy to own as well.
Yeah, nice one. And I have it also in my portfolio, but I didn't choose it because my other company, and yeah, I start to become boring. But it's just called Royal Dutch still, but it's Shell. I mean, it would cost me at the current, how I said, at the current share price of 27.50 euro. I would need 4,000 shares because the dividend per share is 25 cents right now. There's dollar parity.
Yeah.
And that will be at a total purchase price of 110,000 euro. I believe the dividend is really safe. I mean,
Yes.
I don't see it going anywhere in the next 10 years, let's say. And if I wouldn't need to live off the 1,000 euros, I would really nicely reinvest it somewhere else. It is currently yielding 3.6%. I mean, there are other stocks that are also yielding in that, maybe in other industries. So you could argue you can buy Shell maybe more at the bottom of the cycle. I would definitely prefer that as well. But if you ask me today, and I would do that, I would take Shell, because I also see them buying back a lot of shares at the moment. So a lot of the yield increase will come from this going forward. And I just believe that after the great dividend reset they did in 2020, I feel like there's a lot of upside for this stock. And geopolitics is also really a tailwind for this company, I would say.
Yeah.
So it's again, every stock has risk, right? Whatever we choose, it would have risk. Even if you say Visa or something like that with a low yield, you could say like, okay, well, fintech maybe make their whole network obsolete one day. Yeah, so every stock has risk. I would go for Shell, 4,000 shares, and I would then need it in March. I would then get €1,000 a month in March, June, September, and December.
Yeah. I mean, it's nice to have a European company. There's not too many of them. We can reliably get 4 quarters of dividends, which makes it harder to make a monthly income from European companies. It can be done, which I think you've posted about before. But I mean, it's nice to have Shell in there with 4 payments. I would certainly have them. I mean, the price is the only thing, isn't it? 27
Yeah,
euro.
it's a lot at the moment.
So I have for my March, June, September, December, I went with the good old reliable Johnson and Johnson. I mean, look, we've spoke about these guys a lot. We've changed from they are top quality like clockwork to now they're spinning off part of their companies. So they're coming pure play biotech. So there's obviously some risks, but we just look at the dividend per share history. I mean, that's a chart. I mean, that's the porn chart, isn't it? You just put that up over your bed before you go to sleep. It's quite something. So Johnson go in there. I would need roughly 664 shares, costing me a total of $110,000, yielding 2.75 as well. I'm pretty sure those that are quite quick at maths will tot up my shares and share price and realize that I've only amounted to $750 per month in each of those picks. I would offset each month with one single company. I'm surprised that hasn't come up already. And that is, of course, the monthly dividend paying company, which is Realty Income. It's hard not to have those guys in there.
Mm-hmm.
I mean, I would supplement 250 with that, just have them paying every single month, and then have the other 3 guys every quarter.
Nice. And then the total amount that you would need for these 4 stocks?
The total amount, which is not bad, I'm going to take a loan out as we speak, is $290,000.
Nice.
It's an average yield of about 4.75, which do you know what is quite close to the average yield of my own portfolio.
Wow. Then you have a high yield portfolio, because the yield in my portfolio is something like, what is it, 3.5 right now or something like that?
Yeah, I think I remember yours.
3.5. So but for me it's mainly price appreciation in some good stocks that did it. I think the average yield on cost is totally different.
Yeah,
nice one. So I would close out with Texas Instruments.
Nice.
February, May, August, and November. I would need 870 shares today, but we know that in October we are expecting a dividend hike from this company. It's now at $1.15 per quarter. I think they will give us an additional 10 cents. I think it will be 125 somehow. That's what my feeling says. I would need 870 shares at a cost of 147,000 at a current yield of 2.71%. So it's definitely a low yielder in this cohort, like your Johnson & Johnson. But here I will be really buying quality. I mean, everything in the world is getting digital. Everything gets taxed, and Texas Instruments really creates those elements, right? Those chips. Chip industry is a little bit in a difficult situation at the moment, but I don't see it impacting Texas that much as maybe some other companies like Intel. For me, it's really a turnaround. But I mean, Texas Instruments dividend is so safe that I would really sleep well with that one alone. But the surprising fact here is that my total investment will be 337,000 euro, which is almost 50,000 euro more than yours. But if I look at the different portfolios, I must confess that I will probably even sleep better with your portfolio than with my own portfolio, with your selection.
Yeah,
Just because Johnson & Johnson Realty Income in there are really, 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 really safe. And I only feel the same about Texas Instruments as so convicted. I feel Apvi and Altria are probably less than Shell for me, but on the same level as Castellum. So overall, if I really had to pick with a gun on my head, I would probably even take your portfolio because I know it's 50,000 euros cheaper. And I would slightly lean towards the safety towards your portfolio compared to the ones I chose.
yeah. I mean, Altria and AbbVie are the two, aren't they, with the biggest amount of risk. Um, I
Yeah, but
don't
it's
think.
Castellum in my portfolio, which is 5% yield. So you get better rewarded for the risk
Yeah,
that we have in the portfolio at a lower dividend tax.
I'm looking at Altria, right, and I'm seeing 38,000, and I'm thinking that's quite achievable. You know,
Yeah, exactly.
that's quite achievable.
Yeah.
Just and that gives me 1,000 a month. That'll give me 4,000 a year guaranteed from one company.
750 in your case, right?
Oh, 750. Yeah, yeah.
Yeah,
So
yeah,
I mean, it looks quite achievable. I mean, I own all these companies. I chose them based on my
yeah.
portfolio. Texas Instruments was close to coming in there. And Shell, obviously, I would like to have as well. Actually, I would probably just combine all these, split it out a little bit more than what we have. We need
You're an
diversification.
Irish gentleman.
We need diversification. Hey, I'm going slightly off topic here. I'm watching Flash score. Liverpool are winning 7-0. We're back. I'm absolutely buzzing here.
Good.
But let's move on to the listeners' questions. That was quite fun,
Yeah,
actually. I enjoyed that. That was fun.
yeah. We should do more of these.
I think it shows how achievable it can be. I mean, look, 290,000 seems like a lot of money. We didn't take into consideration anything got to do with reinvesting dividends and dividend
Yeah,
increases. In reality, you probably need a lot less than what we have there
yeah,
to achieve that in a more realistic time frame. But it does make it seem more than reach when you do something like this.
yeah. And I think when you think about that, let's say you could get a portfolio for 300,000 euros. For many people, this is achievable if they are just putting every month 500 in, and you do it for, I don't know, 15 or 20 years. It's achievable to have then 1,000 euro a month in income. Yeah. If you do it in some of those high quality stocks. And this is just where the power of compounding comes in as well. Because an annual dividend growth of 6% on that, from you go from 1,000 to 1,060, and if you continue to compound that in another 12 years, it will be 2,000 euro per month. And we spoke about that last episode.
It would grow quite quickly, yeah,
Yeah.
which we did. Let's move on then to the listeners' questions. And the first one is from Manny Mystery. Which companies in your portfolio do you feel confident will be least affected by a recession, and why?
So when we talk about a recession here, we're talking about a recession on stocks that are out of the blast zone. Yeah. So like in the financial crisis, you had to stay away from banks, and in the 2000s, you had to stay away from tech stocks. If the next crisis is in the food industry, you will have to stay away from food stocks. But let's assume that we're talking about an industry-wide recession, and we don't consider the blast zone. Yeah. I would be really, really comfortable with Microsoft, all the healthcare stocks in my portfolio because they are anti-cyclical. So AbbVie, Johnson & Johnson, I mean, cancer patients will still pay for drugs also in a recession, but also a company like Ahold Delhaize as an example, because usually people stop eating out and they go more for supermarket food. So there is really where I would go to. So PepsiCo, Ahold, AbbVie, Johnson & Johnson, Microsoft as well. I think it's really hard as a company, as a Fortune 500 company. I think one of the last things you should do is save money on Microsoft's products in the cloud and such, I actually see it as an opportunity to even speed up, for instance, getting rid of your own infrastructure.
Yeah.
So those are the companies I think will do really well.
Yeah, I think you've named probably, with the exception of Microsoft, they will be considered defensive, aren't they? It's well wrote about out there on the internet. Consumer staples, utilities, and healthcare, what people need to buy, no matter what. They're probably the companies that you would feel most comfortable in. Alexandros has asked us for a comparison of Adidas and Nike as an investment. I think we might actually take that as a topic and compare them head to head. There's another couple of companies we could probably put in there, like Under Armour as well. So we might do that next week or the week after. Marek has asked us about BASF. It's down quite heavily. Do you think the gas crisis can hit even more?
Yes, Marek, but let's not forget last quarter's earnings results. They were really good, and the company was really quick in shifting their business also onto other energy sources. And we are also really looking at it from a European perspective. They have also a lot of plants in other areas in the world where the gas prices are a bit cheaper. So while I fully understand this fear, it also sometimes does feel like the general analyst in the market, or let's say the pundits, they don't really understand how BASF is managing their business, because the last quarterly earnings, which had the full coverage of the whole war in Ukraine with all the mess already, the stock did really well. And I mean, the company did really well. The stock not, but the company did. So actually, I'm quite. It gave me a lot of lesser fear, let's say. It reduced my fear for this risk. Yes, it is a risk. Yes, and I think BASF is affected by it, but I think there's probably more priced in than what we have seen based on the facts so far in reality. So I'm already over allocated in BASF because of an assignment when I was doing the put options. So I wouldn't buy more, but otherwise I would have rounded up probably my position at these prices, because I find it just really, really a nice price when you think about putting BASF on the shelf for the next 10 years.
Yeah, I'm the same. I bought 100 shares of them as well. I agree. The risk was with Russia, but I mean, I think it's overly priced in. And as you quite rightly said, there, the last quarter was quite strong. Actually, the last couple of quarters have been quite strong. So, yes, the gas crisis can hit even more. I still think Europe could have a tough winter, particularly in the energy sector. So let's see. But for me, if it keeps dropping, I might dip my toes in a little bit more.
Nice.
Wolf of Harcourt Street. Glad to have him back actually on Twitter after a break. But he asked if you could give an update on your Noble 30 pie that you created a while back, in around dividends, yield, return, and so on.
So I'm not tracking really the trading 212 pie a lot. I just checked on trading 212, and there's a 9.9% annual rate of return, which I think is good. It's almost 10%, right? I did update all the statistics on my main blog on the website. So if you go to europeandgi.com and you click the first article, the dividends and such, at least they were all up to date in May or June. I did it all after all the announcements of the annual reports.
Yeah.
So that should be fine. Maybe one or two English companies might have done something there. If I look at the average dividend yield at the moment, it is 2.68% for all of these companies. Tax adjusted, 2.16%. So for me, I've been monthly contributing there. It's been doing nicely, but generally, I've got my limit of 2.75%. But in this cohort, you get L'Oreal, you get Coloplast, all these kinds of low yielders as well. Assa Abloy, high quality companies, Linden Sprungli. So it's not too bad. Yeah, if you think about ETFs and such, I think this pie is probably a better one than all the other European ETFs out there. Hence why I also decided to pour money every month in this pie than compared to others.
And speaking of ETFs, then Centrino has asked, What ETF did you choose? I know last week you were speaking. Maybe.
Yes. I have not chosen yet Centrino. I've been studying them. I have been putting things in my watch list. So, for instance, FUSD ticker symbol.
Yep.
I put in my watch list. I really want to keep a close attention on them. I find them still a little bit too expensive, Centrino, but that's a bit the issue, right? That I have with my cash that I need to put into the market. So I didn't buy yet, but that's also the reason that I was just too busy at work, and I don't do such things in a rush that I just then suddenly put a lot of my money just without having done my analysis. I went, and how am I looking at it? I go to my own blog post that I read about it, Centrino. That's where I did all the work. I just have to select 2 or 3, and I looked at my own advice, also analyzed there a little bit, and there was also one ETF with China. But when I saw the top 10 stocks in there, I didn't, at the moment today, I didn't really feel comfortable with all the news we have been hearing lately out of China. So I want to wait a little bit with that, but that ETF looks really attractive to me, I must say. So I probably would do it in 3 ETFs, Centrino, not in one, to also spread the risk there a little bit. But I have not made up my full mind yet with this one.
We have been asked by Martine about ticker symbol TMO, which I believe is Thermo Fisher Scientific. The dividend is small, but they're high quality picks and shovel plays in the healthcare industry. What's quite good actually is he seems to work with the products in the lab and is always a happy customer, which I think is quite important. I mean, I get that a lot with Schneider and Keynes are two in my field. So I think it makes a huge difference if you work with the products and understand what the company do. And certainly if you're a happy customer, chances are there's probably a lot more. I'm not too familiar with their products, but what I can say is looking briefly at their financials, you got their revenue per share, which has been growing astronomically over the last 10 years. Earnings per share has grown with that. So, for example, back in 2010, it was 2.57, and it is now at around 19, $20. So it's quite a big jump over a period of time. Free cash flow per share is growing with earnings. It's grown actually quite strongly. They have a low dividend yield and a very conservative payout ratio, so they're well able to handle the dividend. The only other thing I can see is that their debt is growing as well, which is growing. So that's a little bit of concern. But for me, the numbers look good. I said I don't know the company. They have a tiny yield. The yield is 0.2%, probably too small. Dividend growth is quite small as well, so it doesn't tick my boxes in terms of dividend growth or starting price yield. I could deal with a small yield, but the growth has to outweigh that, and it's just not there.
Super.
Dividend Wave has asked me, how's the adjustment to day shift for the weekends? I mean, so I started a 3-month cycle where I am doing 2 days, 2 nights, and 4 days off. It's the first time ever that I'm doing it. The nights are quite tough. We were supposed to record this yesterday, but I finished work at 7 in the morning. I was back in at 7 at night. So I kindly asked European eDGI to hold off till today. So I got up, I went to bed at 7 this morning, got up at 3 and recorded this. I feel fine. Actually, the 4 days is enough. You get a nice break, but long term, shift work wouldn't be for me. I'm just a company man. I'm helping out the company while we're in the middle of some pretty huge expansion projects. But long term, they would have to pay me a hell of a lot more money to do that.
Nice. And in the meanwhile, you're building up your fuck of money.
Yeah, exactly. Well, no, like my boss knows about this podcast now, so I won't be doing that.
And then BTO5 asked about the feeling about Sandoz. We spoke about that. Then we have Dave, Nia Specialista. He asks, how does our savings rate look like after the summer? Could we break it down between June, July, and August? So in July, I wanted to do 50% savings rate. I didn't make it. I made like 45%. The summer was just too good. In June, I had also something like 40%. I went on vacation. So, but in August, it looks around 60% because I just had less to do.
Yeah.
Also, this is the season where there's a lot of food, much cheaper because you can just easily go to the food market nearby where farmers sell it directly. And here in Poland, you can buy stuff really for a good price. So this month is really looking good for me. I took the bike a lot, so yeah, that's it about here. I don't track it like at the moment on the cent, on the individual euro cent. I do that rather once a quarter,
Yeah.
and that still has to come.
Yeah, I'm the same. I haven't really tracked it a whole lot, but I do know that I'm consistent in what I invest and save. It's all
Yeah.
automated, so I know pretty much it's in around 40 to 45%, and then on top of that, I'm getting a premium doing this shift work, so I'm not spending a whole lot. So I'm saving quite a bit actually during this period, which is good. I don't track it, but it's over 40%. It's probably closer to 50, and maybe a little bit more now that I'm on shift for
Yeah.
3 months.
But you can easily, for instance, especially on an annual basis, it's really simple. I just look at my cash outflow to my stockbrokers. I look at my cash inflow. I look at my savings account, and based on that,
Yeah.
I know exactly what my savings rate is.
I mean, I'm kind of a creature of habit. I don't spend a whole lot on pointless things. I don't need a whole lot.
Exactly,
You know what I mean?
exactly.
So
Yeah.
I save the same. I pretty much spend the same. The odd time you might splash out, but um, yeah.
But do you stitch your socks when there's a hole in it?
No, of course not. No,
No.
no.
No, but there are people that do that as well,
Yeah,
right? Because you could save money on that.
yeah, yeah. I don't actively go out to that, but like I'm a creature of
Yeah.
habit. If I need something, I'll buy it.
Yeah.
But I'm not just going to buy socks for no reason. There
Yeah.
would have to be a hole in it for me to buy more socks. I'm not gonna,
Exactly. And then I will buy them in discount because,
ex,
socks are anyway in your shoes, so nobody sees them.
exactly. Yeah, they'd be laughing at me in work. They all come in with these fancy socks, all these colored. I go
Yeah.
down to Sports Direct. I pay, I don't know, €2 or €3. I get 12 socks with that.
Exactly.
And they say
Exactly.
Dunlop on them. I don't care. Nobody's looking at my ankles. I don't care.
I think, if we will be retired, we will be walking over the street, they will think like, what a beggars. Yeah. They will just throw money at us to help us out that month.
I won't even buy
And
socks. I'll wear sandals.
yeah, exactly. I would even care less. Yeah.
OMS has asked us, what do we think of Keon Group, ticker symbol KGX?
So I run it through my screener, and surprisingly, it looks actually quite okay. I believe if I look at it again, it has a 3.79% yield. That's always good. Price to earnings ratio of 12 and a market cap of 5.29. So the ticker symbol is KGX. It's listed on the German stock exchange, and it really manufactures materials of handling equipment and such. Now, what turns me off just is that they had a dividend cut during the pandemic. So, that turns me off, and that's why I'm already not considering it. Other than that, I scrolled a bit through the balance sheet. So it's not the same as me analyzing or something like that, but it seems to be all quite okay, quite healthy, also on a cash flow point of view. So from that point of view, I think the company is in a good position. But yeah, it cut the dividend during the pandemic. Yeah, so that's for me already a no-go. But nice that you brought it up, OMS, because I never heard of it. And yeah, I like this when listeners bring it up because it really brings me towards new companies and to consider some of them.
Cool. Jacob has asked us, are we considering, after we spoke about Microsoft and
Yeah.
Activision last week, are we considering Activision ahead of their buyout of Microsoft?
I'm considering is something else than doing it. Yeah, so it slips through my mind maybe once every week, but then I'm not such kind of investor actually, and that's the issue that I have with it, because even the risk for me would be too much if it wouldn't get through.
It,
And yeah,
it seems like easy money, doesn't it? And I've been burned so many times chasing easy money, that if it doesn't go through for whatever reason, it's not in either of these companies' hands, remember.
yeah,
So if it doesn't go through, you're gonna lose a lot of money.
yeah.
In
So
my
an alternative might be to, I don't know how much you can afford, right? But to buy 100 stocks and straight away also buy a put option
Yeah,
and see that as the cost of protection for the upside.
yeah. You could do that. So there is I suppose there is options there, but again, the risk for me probably outweighs the reward right now. It's just
Yeah,
relying on the unreliable. I find tough, and
uh,
I've been
yeah,
born I've been born doing this before, so
yeah,
I tend not to think about it. When I do, I always think, maybe I will. It's easy money, but my track
yeah.
record is not great in that. So
Same here. Same
for
here.
for me, it's off the cards. He's also asked us if we have seen Cameron Stewart's latest video on the Geo Group, which is
Mm.
now Burry's only holding. What do you think?
So,
Are you interested?
so I hope Cameron Stewart is not listening, but I fell asleep during his video. So I remember something saying that it has a lots of cash flow, and then afterwards I was snoring. So I just don't remember anymore what the whole conversation was about. I just fell asleep with this while I was watching it on my iPhone.
Yeah, I mean, look, there's a lot of hype because this guy sold all these stocks, didn't he, and kept this one holding. I don't pay too much attention. I didn't watch the video. I don't really have time to watch YouTube. I watch probably yours when I get a chance, and after that, that's about it.
Well, Russ made an awesome video, by the way, on Omega Healthcare and why he sold it.
Oh wow.
I want to recommend that one to you and to all the listeners because he made some really good arguments and he almost started influencing my thinking.
Ru-
So it was a
Russ
good video from him.
Russ is quite good actually as well. I
Yeah,
I listen to the podcast more than the videos just because
yeah,
I don't be at home a lot. But
yeah,
I'll put it I'll put it on the watch list. I will.
yeah,
But for me, look, I don't pay too much attention to these guys. You got lots of them out there. I know some people do.
yeah.
They say follow the money, but usually when we get the information, the money's gone and made. So he has his reasons. I don't know anything about the company, so I will leave it.
Well, wasn't Chicken Genius also selling all his stocks?
Yeah, yeah. The last question of the day comes from Next Gate, and he asks us, "Will you guys actually retire early, or just keep on compounding after the financial independence goal is reached?" Um, Honestly, doing shift work has reiterated my desire to retire early. I will always have to do some sort of work, but I suppose this last year, particularly since the pandemic has ended, my workload has increased. Obviously, that has benefits, but it has other things as well that's impacted. So my goal is to work my ass off. I want to like I always strive to be the best at what I do. I have pride in my work as well. So I will do that while I'm there. But I do have one eye on an exit gate within 10 years. So I plan on retiring from engineering, probably open up a coffee shop or something a little less stressful and take it from there. But yes, the plan is to actually retire and enjoy life.
Yeah, I don't know, honestly. I have my thoughts changed on this. I read the other day an article of someone who retired early and just went mad and
Yeah.
had to go back to doing something and went back into work again. I can imagine that if you're the only one sitting at home, kind of, and everyone around you is in this routine, and I can imagine that some people just go crazy. What I can tell you is that probably I will work less days because I don't need to work 5 days
Yeah.
anymore. But I really like my job, so if it is still fulfilling as it is now, I don't see myself necessarily leaving the company. On the other end, I always dreamed of doing more kind of charity work
Yeah,
or something like that. There's also something other that sometimes goes through my head. It's like, okay, what if I'm at 70%? Or something like that. Maybe I just call it a day and start doing full time, I don't know, YouTube blogging, and use some of the advertising income from Google Ads and such as to fill it up. It would be more than making from my passion my work. But I would then consider that I started working. Yeah, or
yeah,
I took another job.
yeah,
So all these thoughts are in my head, but in the end, the nice thing is it gives so much mental freedom because we have options. And
yeah,
for sure, I don't see myself working till 65 at this job. But here's the question: would I retire at 47 or something like that, like fully retire? I don't know, but for sure, I will not sit behind
yeah.
the flowers at home.
Yeah, I would not retire to sit at home. I think that would drive me mental. I would need something. I need something to do, but I don't want to work. I don't want to work the amount of hours I'm working. I don't want to be tied to working either. I want my own schedule.
Yeah, yeah, yeah.
So
And health, right? Focus on health, and
yeah,
stress is not healthy.
exactly. So yeah, the plan for me is definitely to retire early. Enjoy travel a lot more. There's a whole world out there I want to see. I didn't get to do as much as I wanted in my 20s. Kids came along, so I will certainly enjoy it while I can. So
Nice.
that's my plan.
Good. We came to the end of the show, Derek. Thanks so much again. And thanks also to all the listeners for these nice questions. Really, really thought provoking sometimes as well. So yeah, let's get back again next week, right? We will we will see how the stock market does this week. Maybe I'll buy some shares again. I just got my last salary, so I've got something to spend again as well from my salary. So yeah, it will be an interesting week again ahead of us.
Look forward to it. And again, thanks to all our listeners, and we'll see you all next week.